and how you can easily predict next candlestick. In fact, I have a strategy which I can teach you how to do that. Okay, but all I have to do is that I have to give you some introduction on how you can approach the market first, because that's the most important thing in trading, how to approach the market first. So let's go to the chart now. Okay, so as this is day one, and I know you are not a new binary trader. Okay, you are still old binary trader. You are not new to this trading. Okay,
Uh,
so let's
okay,
assume
okay.
that you open the chart and you saw something like this. Okay, you open your chart and you saw something like this. You can see that there is a strong uh, price movement to the upside. Okay, this movement occur when there is a certain price action pattern that occur in the market. Okay, we have so many um, charts here. We have so many charts. All you have to do is choose one that you can trade with. Okay, let's start from Euro USD. Look at this Euro USD. Do you know you can trade on Euro USD? Okay, because the chart is very understandable. Okay, you can easily understand how you're going to analyze the market. You can even mark out your key level with ease. Okay, you can mark out your key level with ease. Okay, these are your key levels. You can mark out your key level with ease. This is to let you know that okay, you understand what you are actually doing in the market. These are the major key level. Okay, let me tell you the reason why I draw this line in the first place. If you look on the left side, okay, we can see what we call um, rejection zone. In binary option, I call it rejection zone. This is what I mean by rejection zone. Okay, where we have rejection. Anytime the price touch this particular area, it rejects. Okay, that is what we call rejection zone. If you look again on the left side, it also become a rejection zone here. Okay, so that rejection zone has now been violated. You see this last candle that formed here. You can see this last candle that formed here. This is the breakout candle. So which means that any price that will come above this level at least should reverse the market. So it means that the market has now changed from this level as a support
Hello,
to
sir.
now become a resistance. Okay,
Hello.
this level as a support to now become a resistance because the price here has break this support level. Okay, you see that the price drop, come back again, then reject. Again, we see so many rejection, and then the market drop, continue to move downward. So that is a rejection zone. If you check on the left side, on the right side, you see that anytime the price approach that level, the market always reverse. Check again. Let's see if there's any approach. Okay. Okay, price has not reached that level yet. Now, that is why I draw this first line. Now, let me explain how I draw this second line. Okay, you see that there's a rejection level here. Okay, the price touch this lane, this area, and then reverse. You see so many strong sellers movements. It means that there's a strong level around this area. If you go to the left side to check it out, to confirm, okay, let's not just waste much of our time. So if you look at it again, anytime the price come back to that same level, we have a rejection. But this time, this candle has finally break that level. Okay, this candle has finally break that level. As the price has break the level, anytime the price come to that same line, there must be a reversal or a rejection. You see that the marbozu or a shaven top candle reverse. Okay, you can see again second time reverse. Okay, fine. This candle finally cross the line. Okay, you know there are some things that usually happen in the
Hello, sir.
market. If you have a strong
Hello.
a
So can you
strong
hear me?
level, that anytime the price reach this level, it reverse. Anytime the price even cross this level and then come back again, it reverse. Okay, but sometimes
Sir, I'm
the
not
price
hearing your
might cross
voice.
this level. Okay, you know sometimes you expect the price to drop, then continue to go more up, but it doesn't happen like that. The price might still come back again to represent a false breakout. Okay, that is what we call a false breakout. If you remember the video I uploaded on YouTube, I mentioned something about false breakout. The price will give you a, a reason that the price is going to break to the upside or continue the upside. But the next price action did form a strong red, indicating that this is a false breakout. Okay, sometimes the market will give you something like this. In this case, it seemed to be that the market might likely to give us a false breakout, but you can see when the price entered the zone, we have some sellers movement. Now, as this candle now has violated the line, this candle now has now violated the line. So if price come back to this level, expect some bullish entry. Okay, you see that there's a rejection. Okay, you can see that at the price drop to that same level, we have some bullish entry. Then this candle almost touched the line, but the next candle crossed the line and then it went down, down, down. No reversal occur. So that indicates that this candle here is now the breakout candle. This candle is now the breakout candle. So if the price will likely to come back to the same line, then we can expect some reversal with a confirmation. Okay, let's check it. Let's see. Okay, here we have a rejection, but the
Okay.
next candle did not reverse. Do you know why the next candle did not reverse? Because the market is likely to maintain this area here as a reversal zone. Okay, the price is likely to maintain this area because when the price drop, it reversed to the upside, and finally it come down again to this level. The price come down again to this level instead of continue to push higher, but instead it dropped down. So this indicate that this area here is what we call sellers area. So in the future, if price should able to come to this area, the market will surely reverse. You see this candle reject from that area. This is telling you that there are some sellers. But the next candle form a green candle. And what happened next? The next candle was red. And then the price dropped. Okay. Then this candle decided to go up. Sellers still entered once more again. And the price keep going down. They keep going down. Okay. Let's see if the price really come back to that same level. Actually, it does, but only rejection that occur.
Yes, sir.
Here also we have rejection. Here also we have rejection and a reversal sign. If you look at this, this candle got rejected from that line, and the sellers enter right. But this candle got rejected. Instead of sellers to enter, buyers enter. Do you know the reason why? Because if you look at the gap, okay, you see that there's a tiny gap here, this space here. This indicates that there will be no enough the buyers to fill. Okay, so all you have to do is that you go with sellers immediately. But this, you can see there's a gap. This gap indicates that the buyers is going to fill that gap. Okay, the buyers is going to fill the gap. So once the buyers fill the gap, sellers will definitely enter. But sometimes if the price fill the gap, strongly like this. If the next candle is very strong, well, it seems that the market is going to come back to this same level, then continue to reverse to the upside. But you have to observe closely. The gap here, the height and the size of this gap should not exceed how the next candle is going to form. If you look at it very well, they have the same body size. Okay, so that is why the
Hello,
buyers
sir.
have to
Can you
fill the
hear me,
gap,
guys?
the
Hello.
sellers entered. So let's see, and then the price did not move toward that same level. Okay, okay, you can see the price also come back to that same level. We have rejection, then we have reversal, and then we have a reversal here. Okay, also we have a reversal, and then the price keep pushing higher. Okay, see that the price have break this line. So when it goes up, it come back to that same point, to that same line, and then reverse to the upside. This now tell us that it's now a support. So if the price reach that same level, okay, this candle have already violated again. This is a sign that there's no buyer's entry. Okay, this rejection here indicate that there are some buyer's activities. Okay, if this rejection is very strong, the sellers have to fill the gap for buyers to enter once more. But you can see that the buyers fail to enter here, and this candle also is very strong. There's no rejection. So this indicates that the sellers, the buyers are not strong enough to reject the price. So that is why the sellers took over. So as the sellers have taken over, if the market again once visit that same line, we have we're gonna see a reversal to the upside, okay, to the downside. You see that there's a reversal to the downside, a reversal to the downside, okay, and that is all. Same thing goes to the third line, okay. The reason why I draw the line here was to make sure that the line touches as many of its reversal points, like a reversal point here, a reversal point here, okay. If that reversal point is violated, like this, that reversal point is violated and it's not respected again, that means it's going to become a resistance. It's also here resistance, and here, okay. So that is this, that is that. Okay, you can see this is how you analyze the market, and this is how you can easily predict next candlestick or next price action. Okay, I think I took a trade on euro, on USD CHF today. I want to show you a quick strategy I use on euro, on USD CHF. Okay, I use the 15 minutes chart to analyze. Okay, I use the 15-minute chart. So in this 15-minute chart, I'm going to be explaining the major reason why we have this
Hello, sir.
bullish movement. Okay,
Hello.
if you look on the left side, we have um, this low. So if we drag this low to the right, the sellers has break the low because we have this downtrend, this downward movement. So sellers has break the low. So this is the origin of this downward movement. The origin of this downward movement, I must also draw a line, extend it to the right side. I must also draw a line, extend it to the right side. So you see that the price has also violate or break the line as well. The price keep going up, no reversal. Same thing here. The price touch the line and then still continue to move downside, and then buyers take over. So, which means that my prediction should base on what is going to happen around. My prediction should be based on what is going to happen around this area. what is going to happen around this area. So if price was able to or is able to reach this area, then I can easily analyze and predict the next candlestick. Remember, I always trade on 1 minute, but this is 15-minute chart. I just want to show you how I take the trade here on this chart here. This is 15-minute chart. So this is the area I will be expecting some bullish entry. Let me draw the line. Okay. So if the price comes close to this line, there must be a sign the bias is likely to enter. You see the price break the line, then continue to move upward and not much. Okay. Here we have the first reaction, the price reject from that same level. Here we have the second reaction. Okay. You see that the buyers start entering the market, but this is not how this is not how I enter the trade. I move from I move from 15 minutes to 5 minutes. Okay, I'm doing some top down analysis from 15 minutes to 5 minutes. Then I saw this kind of movement here. Okay, I saw this movement here because after the price rise up from this support, it rise to this level and then it reverse. That reversal occur and then the price made that reversal here, this area as a support, then push the price higher. Okay, let me explain. This is what I mean. The market drop from and then the price reversed from this level, went up again, creates some minor resistance, come down, create some minor supports, continue to push higher until finally break this high. So any price below this reversal or this buyer's entry point is where I will execute the trade or is where I will consider some buyer's entry. Okay, it's where I'm going to consider some buyer's entry. So when I saw this, then I now move to 5 minute time frame because that is 5 minute time frame for me to confirm some things before I execute a trade on 1 minute. Okay, on 5 minutes I can see rejection. You see the price touch that same line, and then the sellers are weak, buyers entered. Sellers is close inside the level, buyers entered. Also rejection, buyers entered. And then the price keep going up, the price keep pushing higher, the price keep pushing higher, the price keep pushing higher. Okay, so then I now move from 5 minutes to 1 minute. Okay, because this is actually where I want to be taking the trade. This is where I want to take the trade. Okay, and that is where I want to analyze. Okay, so now move to 1 minute because that is the time frame I supposed to use in analyzing. So now, as the price has now reached the level, then I must observe the candlestick pattern. Okay, in 1 minute, I must observe the candlestick pattern, the rejection, and the weakness, the strength of the price. Okay, you can see that the moment the price drop, and then it has multiple rejection here. Okay, let me adjust the line. Okay, I'm going to place the line at the wick, at the shadow. Okay, I place the line at the shadow. That is the lowest point the price reached before reversing to the upside. So any price below the lowest point is going to reverse the market. So when I draw the line perfectly, then I now move to the current price action. Okay,
Yeah,
I move to the current price action.
yeah.
Okay, you see that the moment the price reach that level, sellers become weak. There's a rejection from buyers. But this is where I am expecting the candle. I'm expecting the candle to close below this line, just like this, before I can go with buyers with confidence. This candle did not close below the line, it closed above. So the sellers must still enter one more red. So if the candle close below the line, then the buyers should surely enter. Okay. Again, the second time the price again closed below the line, what happened? Buyers entered. Again, this candle here closed a little slight below the line, and what happened? Buyers entered. You see that if I want to take trade here, I might have won so many trade here. I won so many trade here when I took the trade. Okay, I wait for this candle to close below this line. I execute a call option. Okay, then I saw the price again. The price did not go up, but instead it come back again. Then this candle closed below the line. I place a call option. Okay, the price did not go back up. It come back again.
Okay.
Then this candle closed below the line. What I did next, I placed a call option. This is three trade. Okay, one, two, three. So I have already taken three trade here. All I need to do is wait for the price again to come back and place call option. Okay, okay. This is the fourth one. Okay, this is the fourth one. Price come to this same zone close below the line. Buyers entered. I place call option. Okay, this only got rejected. Then finally, the price keep pushing higher and did not come back to that same level again. Okay, but what I'm seeing is some rejection. Okay, and then the price keep pushing higher, something like that. Okay, so now when I see some price movement again, when I see some observe some price movement again, I go to the left side again. Then I drop some levels, something like this. I look on the left side, I see the buyer center here. Okay, okay. So right now, what I need is for the price to at least
Yeah.
come back to the same level, use as a resistance again, and then goes up again, then before it come down. This is what I mean. I've already drawn the line on the left side. I've already drawn the line on the left side. So the price reach this level and then reverse, right? So what I want is for the price to come to that same level, violate the level, maybe trying to retest or become a resistance multiple times. And if the price finally break the level, then
Yeah.
if the price return, I'll be looking for a call option opportunity here. Okay, so that is what I'm going to do. I've already draw the line here. I've already draw the line. So what I need is for the price to violate the line to the downside and then become a resistance for some while. Okay, now we have rejection here. You can see the price already break the line. Okay, the price already break the line. So what I need is the price to become a resistance. Okay, so here you can see the price has it to become a resistance. The market reverse how many times? Here again, the second time market reverse. You can see this swoop in price. The price also reverse, but I'm not using this as a resistance. I'm using this one. Okay. You can see again the price is as a resistance and then the price reverse. And then this candle, this candle finally break the line. So what I want to do, what I'm going to expect is that I'm expecting the price to come back again to the same level, close below the line. Then I'll go with call option. Okay, almost. Well, I can't go with call option here. Almost. And then this, you can see there's a rejection, but the candle did not close below the line, right? So what I need is wait for one more seller's candle to form below the line, then I'll go with call option confidently. But I think the sellers are trying to enter again on the next candle, but there is no sign of sellers. That is why the candle closed as doji. And there's no sign of sellers. Buyers will definitely enter. That is why we have a green candle on the next one. Then this candle is now inside the zone or below the line. Buyers entered. Here only have rejection. No. What we need is the price to close below the line and then market reverse. Just like this. You see the price close below the line, so buyers entered. Then this one also, the price closed below the line, so buyers entered. And then the price keep pushing higher, continue to move upward, 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 upward. And then the market is now making some retracement. I think this retracement occur in the 15 minutes. I don't know why there's a strong sellers candle. Okay, but nevertheless, this is how you analyze the market, and this is how you predict candlestick. Okay, you can take this as a strategy, but if you must understand the price action. So this is how you read market pattern, market structure. If you are able to analyze the market structure like this, believe me, trading will be a lot more easier for you to trade, especially binary option. If you trade like this, or if you analyze the market like this, you will make profit every day in binary option. But there are some time when market will not reverse, because all you have to, because sometimes like this, you see that this candle closed below but still not reverse. It's because it's going to become a resistance. If the price closed below and did not reverse, wait for the price to come back again to become a resistance. Okay, so not all the time this trading strategy or whatever you call it is going to work. Okay, but you just have to understand the market structure. Understand the market structure. Also, if you look at this trend line, this indicates the bias is going up. Okay, and that is why the market make this strong downtrend. So this indicate the price will go up. So when you are, I think you show me uh, a picture of some of the trade that you took. You show me something like this. That okay, this is a resistance. Why is it that the market reversed from that resistance even without touching the resistance? Well, because you didn't observe the continuation movement. If market is moving upward, market move like this. You must break this, then reverse. Okay, but market is going to move downward. It must not reach this level, then it's going to reverse. Okay, so markets, you have to observe the market shift, market structure. If you observe the market structure, you will know when the market is going to reverse. You also know when the market is not going to reverse. Very simple as that. Okay, so let's see some more example on how you can analyze the market. And then, okay, I've said something about Euro USD. That okay, you can trade on Euro USD. Okay, see that the candle closed below the line, the price still reverse. Look at this. This candle closed exactly at the line, but not below. But the next candle closed below the line. The next candle closed below the line and buyers enter. But this one close exactly at the line, no buyers. Same thing here, close exactly at the line, but buyers enter. But this is what you should be looking for. This is the type of candle. Wait for the price to close below the line before you execute the trade. Because if you look on the left side, we have a level here. okay, and that level has been violated, it become a resistance, also become a resistance. Finally, the price break the resistance, now it become a support. So it become a support here, okay. And there's another resistance somewhere around here, okay. See this resistance, and this resistance, okay. So that resistance has been violated, it become a support, also become a support, and then the price again come down again, violate the support, it become a resistance, it become a resistance. Now, do you see that this price,
Hello?
excuse me,